On June 12, SpaceX is expected to go public in what could become the largest IPO in human history. This may not be an IPO where everyone participates, but one in which millions of people may stand at the sidelines watching, while only a fraction actually get meaningful allocation. Because when a company of this scale enters public markets with a float as small as 4%, we are not dealing with a normal listing. We are dealing with a scarcity event. And scarcity at this scale doesn't behave normally. It amplifies everything: prices, attention, narratives, and capital flows. To understand why this matters, you need to understand that SpaceX is no longer just a rocket company. In this video, I will show you what happens when infrastructure-level companies collide with capital markets. Welcome back. I am Kokombo, and this is the Data Investors Playbook. SpaceX is becoming a multi-layer infrastructure platform spanning orbital, communications, and computational networks. SpaceX isn't merely raising money to expand a business. It is raising $75 billion to expand multiple infrastructure systems simultaneously. Starship expands orbital infrastructure. Starlink expands communications infrastructures, while AI data centers expand computational infrastructure. And this may be the most important clue investors have about what SpaceX is trying to become. SpaceX has proven to be the #1 game changer in the rocket business. Before SpaceX, every launch resulted in a wasted vehicle. But SpaceX created reusable rockets, transforming the rocket industry entirely. Its Falcon 9 boosters launch, return, land themselves, and fly again. That shift collapsed the cost structure of access to orbit, and the result? Dominance. SpaceX now launches more payload into orbit than any company or country on Earth combined. That is no longer aerospace innovation, but infrastructure control of orbital access. But rockets are not the main economic engine. Starlink is. Starlink is a satellite-based internet connection network designed to deliver connectivity from orbit. Instead of relying on fiber or cell towers, it delivers internet directly from space. Today, Starlink has approximately 10 million users globally. It generates $11.4 billion annually, 4.4 billion operating profit, 2025 estimates, and it has a 39% operating margin. That makes Starlink one of the fastest scaling high-margin infrastructure businesses in the world. Its strategic advantages are simple. It works where traditional telecom infrastructure fails, across remote regions, oceans, aviations, and conflict zones. Starlink becomes the fallback internet layer of the Earth, and financially, it becomes the engine funding everything else SpaceX wants to build. The third layer is more speculative, but strategically important. SpaceX is now connected to Elon Musk's broader AI and digital ecosystem through XAI and the X platform. What does this mean? It means that it creates potential integration across his AI systems, that is Grok and XAI, global data distribution from the X platform, and compute and infrastructure networks. At present, these are not the primary revenue drivers for SpaceX, but they introduce a form of optionality. And in high valuation companies, optionalities often become narrative multipliers. With all of this coming together, we see that SpaceX is not just a company anymore. SpaceX is becoming infrastructure, and that changes how it must be valued. But the problem is, investors are being asked to pay infrastructure level valuation for infrastructure that is still being built. At IPO, SpaceX is expected to be valued at $1.75 trillion US dollars, a correction from its initial $2 trillion push. At that level, traditional valuation thinking breaks down. So, we're going to separate the business into its core economic engines. And here's what makes this IPO fascinating. SpaceX generated $18.7 billion in revenue in 2025. Starlink alone accounted for $11.4 billion of that. The company also generated approximately $6.6 billion in earnings before interest, tax, depreciation, and amortization. Those are impressive numbers. But then the story becomes much more complicated. Because despite that revenue growth, SpaceX lost nearly $5 billion in 2025. And in the first quarter of 2026 alone, it lost a whopping $4.28 billion US dollars. Its accumulated deficit now exceeds $41 billion US dollars. So investors are being asked to value a company at roughly $1.75 trillion US dollars while it continues to lose billions of dollars. How is that possible? Well, the answer lies in what investors think or believe SpaceX can actually become. So, using conservative infrastructure and telecom style multiples, Starlink alone could imply roughly 60 to 100 billion standalone value, depending on growth assumptions. But in SpaceX's case, it is not valued independently, but as a compounding global infrastructure layer. For SpaceX launch business, let us look at a valuation between 80 to 200 billion, depending on success assumptions. SpaceX launch segment includes Falcon 9 reusable rocket systems, Falcon heavy mission, Starship development pipeline, government and commercial contracts. It operates more like high efficiency logistics than traditional aerospace, and its advantages are extreme cost cutting via reuse, global dominance in launch frequency, strong government contract visibility. Also, considering defense and government infrastructure, SpaceX is deeply embedded in the U.S. defense satellite deployment, national security communications, strategic orbital logistics. So for its valuation consideration, due to long-term contract stability and geopolitical significance, this defense aspect carries significant strategic valuation premium, even if we do not necessarily know its revenue for now. Then there's the AI and X ecosystem option, both contributing meaningfully to narrative-driven valuation expansion. So when we sum the measurable components, Starlink 60 to $100 billion valuation, launch business 80 to $200 billion valuation, defense premium, embedded strategic value, AI optionality, speculative upside, we still do not fully arrive at 1.75 trillion valuation using traditional methods, which means the remainder of the valuation is driven by three forces. Number one, growth expectations. Markets are pricing aggressive assumptions around Starlink global penetration, Starship's scalability, launch cost compression, and defense expansion. Two, infrastructure premium. Infrastructure assets command structurally higher valuation multiples than operating companies. SpaceX is increasingly being treated as global communications backbone, orbital infrastructure, orbital logistics infrastructure, and a strategic defense asset. And finally, 3 is the Elon premium. The market may be asking what kind of civilization scale platform is Elon Musk trying to build. So whether we like it or not, a significant portion of valuation is tied to he has been known to execute larger than life projects within very short periods of time. It's also tied to long-term mission alignment, capital allocation, reputation, historical success across Tesla and SpaceX. So in essence, investors are not just pricing cash flow, they are pricing belief in his ability to execute. But at what point does a great company become a dangerous investment? Because once expectations are priced into the trillions of dollars, small deviations from perfection can have huge valuation consequences. So then let's consider why this IPO is largely different from anything we have ever seen before. The company is only letting go of 4% of shares, and it's very possible that this will result in early violent price discovery. Unlike IPOs of this scale, this IPO is different because it is reserving about 25 to 30% of the 4% float for retail investors. This is because Elon Musk desires to please his social army, who are also big-time investors. SpaceX is also designed around concentrated control. This means that Elon Musk is retaining dominant voting power, which will grossly reduce shareholder influence. Also, unlike other IPOs, SpaceX doesn't have a single 6 months lockup period, but is introducing staggered insider selling windows. This will help reduce liquidity over time instead of one sharp release. So with all this, you see that SpaceX is not just a listing event, it's a liquidity and a narrative event all happening simultaneously. And what we should have in mind that with all this around SpaceX, this equity is not going to behave like a normal equity. We're just going to watch what is actually going to play out. But here is the most important insight for retail investor. The biggest opportunity here may not be SpaceX, but all of the opportunities coming up around it. Because when capital flows into events of this scale, they hardly stay contained. They spread outwards into suppliers, competitors, infrastructure providers, defense contractors, satellite networks, and smaller companies within or connected to the ecosystem. This means that some of the real stories and real profits may not actually be from SpaceX itself, but from the economic shockwaves the IPO generates. And that's exactly what I'll be breaking down in the next video. If you enjoyed this video, don't forget to subscribe, like, and share. Remember, before you invest, let the data guide you. See you soon.